underway here. And we got a screen up for you guys. There we go. All right. So, guys, welcome to our Candlelight session. Hope you brought your questions or anything you'd like to discuss. Any comments, concerns, questions, whatever's on your mind. But yeah, good stuff. So here I've got the ES futures, which is basically a SPY. And yesterday, well, today for most of you, we have this low. This was before the market opened. It popped up, and then when it got here again in this area, I started looking at it, and very quickly on a 30-minute chart, I noticed it just printed a new low. So the candle got there to the low, and then you can see it just started printing a lower low. And so that's when I got into the 1-minute chart. Where was it? I think it was in this area. Where was it on the 1 minute? Let's look at this. 68.46-ish, somewhere here. Down, 46. Yeah, it was here. There you go. You see that area right about there? So it printed a new low and pulled up and then retested the low. On a 1 minute, you can see that breakout retest. There's your entry area for the short. So I got into this short. I think I had a partial in this area, and the rest was out at the close or before the close, somewhere here, somewhere. So really simple, you think there's support there, and that's true. There is support. Well, there was. So when it comes back there, you're thinking the buyers may still be there and then go higher. But the time you change your mind and start thinking maybe it's going to break that support and go lower is when it simply prints lower. The buyers have not stepped up at a higher price and pushed it up from higher. That would have been the support still being there. What happened is it hit that support level and then pushed lower. That's when I started going into the 1 minute chart for the short side. So again, pretty straightforward. And with that, also you're going with the price action, which is in this trend, it was all downwards, right? The same old theory we talk about. The market is likely to continue doing what it's doing rather than do something different. So in this case, what it was doing for a couple hours before it got to the bottom support there was it was in a downtrend. So it's likely to continue. So putting all that together, it was not a complicated idea to think about a short here and then go into the 1 minute and then find breakout, retest, and you're in that thing. It didn't go all the way as I was hoping it would, because I had targets further lower, but got one little bit out of it and profitable situation. So trading does not have to be complicated, guys. It really doesn't. And of course, there was all kinds of news, Greenland tariffs, whatever. Even if you're not paying attention to the news, you can watch candlesticks and see that it's on the move, right? Not too complicated. So that was yesterday. Another good one was here. Look at this. This is gold, and it's on the move right now. But we were talking about this during our live session. Well, yesterday for me again, today for you guys, where when we had the long holiday thing, was Monday was off, but Europe and Asia were open, so gapped up, consolidated, broke that high. We can see it over there. And we talked about this area. If you go and break that high, then go into the 1 minute chart, and we found where breakout retest set up here on a 1 minute, and off you go. Same as what I just showed you on the SPY. So again, just another breakout trade. And then, yeah, just kept grinding up, made the high there. And a few hours ago, look at that, broke that high. And look at this thing on the move. Again, same setup. Let's look at the 1 minute here. I haven't looked at it yet. Where is it? Where was the high? Let's say, yep, that's that high we're talking about. And here you can see with a very aggressive candle. Here's your big breakout. Here's your pullback. Now, it didn't go exactly back to retest the breakout level, but levels are areas, we know that. So if you're confident of the breakout, you're looking for the retest, and zoom in a little bit. It comes back, starts printing bullish, so higher lows. You can enter perhaps in this area. I think I would have entered. I was asleep at the time, but probably in this area with a stop below it, and you're running with this thing. This is the gold futures. So there you go. And there's another clue as well for gold futures. I just checked my email like 5 minutes ago, and I found that Ninja Trader had emailed about precious metals or metals futures, saying that the margins have increased because of increased volatility. Well, now that's a good sign. Basically, volatility has increased, which tells me this thing is on the move. And so Ninja sent the email for that. And if it's on the move, then I'll go look at it. 30-minute chart, look at the consolidation, breakout. Now we're having a consolidation again. And if it gets to the new high, we'll look at the 1-minute chart and see if we can catch a breakout on that. So again, there's only two things that really happen in the financial markets. The price either goes sideways or it goes directional. And that's all there is. So you really boil it down to simple concepts and just try to execute on simple concepts. Mostly you'll be okay. There's not too much to think about. Just manage your risk, stop out where you have to, re-enter if it's still there, and let it run for your targets. Not too difficult, huh? What's interesting is I would have expected silver to be on the move as well. This is silver, but it is not. And it did not get to that high over there in the last few hours, so there would not be a trade on this. It's just going sideways. All right, we got this. So who wants to discuss what? What's on your minds? If you got no questions, well, it shows me you know exactly what you're doing and you know how to make $1 million a day and everything's fine. Yeah?
No, I have no idea what I'm doing. So is it possible for you to go back to the SPY futures again?
Yep, here you are.
Okay, so I'm interested in that 69 area, 6,900.
Yep.
So would you see, is there a chance that you would see a trade there? And if not, why?
I think I do see a trade here. And the trade here is, let's do it by time frame. So you have this consolidation area, and then you have the breakout. That's the breakout happening. Then it comes back up, and you can consider this area maybe a retest, but it's tricky because this made a higher high retest of what was previous support. But anyways, so difficult to trade this, and then up in this area now where you're interested, it's gone back into this consolidation zone. Now it put in this one doji, then put in this doji with a lower high and a lower low. That's interesting. Because it already did a breakout. If it goes back into the consolidation zone and starts putting in the lower highs and lower lows, and maybe establishing a new downtrend. And the next one, again, lower high and lower low. So within this hour and a half, you're thinking, hold on, you have the consolidation, the breakout. This could be a retest. It could just be ready to start going down. You definitely don't think long, simply because of lower highs and lower lows.
Right.
So then you're thinking maybe there's an entry somewhere here, right? Sure enough, this thing starts going. When you start thinking there may be an entry, that's when you zoom into a 1-minute chart and start looking for it. Let's see if there is a setup. Now, on a 1-minute, what you'll see is it's been an uptrend, and then you're looking for a downtrend. So you're looking at a reversal setup here with lower highs and lower lows. So in this time frame, let's look at from about 11, from 10:30 to about 12:30 or so on the 1-minute. So that's here. That's those three 30-minute candles that's happening here, lower highs and lower lows. So you're looking, let's see, also, like we said, 1-minute chart has been going up, and here's where you're looking for it to go down. So a couple of ways to do this is one is a simple way. Identify the low, right? And then wait for the breakout. Here comes the breakout. It goes down. You can see that small consolidation. Let's zoom in a bit more. Here. So this is your support, lower low. And it keeps making lower lows and lower highs at the same time. So it gets to that lower low, and you're waiting for that, look at that, consolidation to the breakout. And that's a good one because even in the small area here, zoom in further, you'll see there's lower highs here as well. Actually, constantly lower highs, especially as it gets into the support zone, descending wedge kind of setup, right? So you may enter perhaps here, especially after this reverse hammer. I think this is where I may get interested.
That's a 1 minute, right?
Yes, this is the 1 minute.
Yeah.
After this descending reverse hammer, I may take the entry short below the new low, or when it makes a new low with a stop above the hammer, or give it a little bit of room up there, perhaps. And then this thing breaks down, and even on the smallest time frame, look at that retest of the breakdown. That's here. So if you don't enter during the consolidation, you can enter the breakout. If not, then you wait for the retest. You can enter there as well. All very simple setups.
It also looks to me like a break of a channel. Like there was a channel until about 12:30, and then the channel broke.
Okay.
You
this
like
channel, right?
if you draw a channel, you
Yeah.
would see like around 12:30-ish where the channel.
Yes. Oh shit! I don't really know how to draw lines on this, but but yes,
Probably
I see.
just a trend line, probably.
Yeah, but yeah, I can see. You can see.
Yeah, that doji that you looked at around 12:40, was it 12? Yeah, right there.
Mm-hmm. So yeah, this one.
Further down. This one, yeah.
Yeah,
I think that's the one where it broke. It broke the
Mhm.
channel.
Yep. So there you go. It's not too complicated. You're getting fractal patterns here, where we saw on the 30-minute lower highs and lower lows. And then you go into the 1 minute, you're seeing the same thing. And then even on a tinier picture, just on the 1 minute, you're getting the same thing, lower highs, lower lows. And you're getting a tiny little support zone just about there. Happens in the same area. If you're still not confident of it, you can let it go. Again, breakouts go. And genuine breakouts, 70% of the time, genuine breakouts have good retests. And this one gave that to you. I mean, this whole thing was just near perfect price action. I mean, this is straight out of the textbooks,
Because to me, that 6,900 level was a traumatic level that you were talking about. Because that's where it broke hard from that level, and then it came retested, and that's where like it was swinging wildly until 12:40, and then it just broke the channel and just went down.
Yeah. Now it's great that you're able to identify this traumatic level, 6,900. And if you're able to identify it, going back to the 1 minute, here's something interesting. Oh man, I lost the chart. Hold on. Here in this area. So if you're able to identify 6,900, what you'll notice on this 1 minute chart is the 1 minute went up, it got put in small candles, consolidation, and then look at this massive reverse hammer right at 6,900.
Yeah.
Massive. And that's a really, really perfect one. I mean, talk about a reversal setup. You're looking at this massive aggressive uptrend, and you can see the trend slowing down. So here's the aggression. And after that first move up, it's just basically slowing down, slower, and it actually starts declining a little bit. So now it's going sideways. You're not thinking about going up anymore or down, just thinking sideways. And then you see more sideways, and then it puts in this reverse hammer. So it tries a breakout, comes back down, reverse hammer, room to the left, massive room to the left, a perfect shape on this hammer. Then the new low is your entry. Since you've already identified the level, here's your reversal. Your entry's right there, your stop's right there, your first target's here, down here, or perhaps we might put it here. We've already got 10R on the one target. You only take off half the position there, and then you're in this even further. It never even tests your stop out. Gets to the target, and then this thing just keeps going and going and going and going. So there are ways to identify these things, and they're not complicated. I think I was too busy eating ice cream at the time. I wasn't watching this. But look at this thing. I mean, it's really fantastic trading. Really not complicated. Yeah, Sahil, go ahead.
Hey, good morning, Avi. Oh, So right before this inverted hammer, there are two green candles. So
Mhm.
do you think if someone can enter in here and for long position, or do you want the candles to be engulfing? If you look for continuation
Yeah,
of the
looking for a continuation. That's a good one. Why would you think of it as a long? Let's again go back to the 30-minute. You're looking at it in this area here. Now, in this area, what you're seeing is consolidation, breakdown, back up into consolidation, into the previous consolidation area. So there's two possibilities here, the way I see it. One is it gets stuck in the consolidation area. It seems like it did for a little while. Or the other is this is just a retest of the previous breakdown and it goes down. I would not think of this as a long until it really breaks a significant high. So you have a high over here, or even here. I would think of these really strong overhead resistance areas that if they break, so the price might be up in this area, then you have an ABCD pattern going up with a regular hammer, not a reverse hammer. And then you have something going upwards. This gave you the absolute opposite. So point is, on a 30-minute chart, I would not be thinking about this as a long. I think I did try a short on this yesterday. I think it was here and took a break even or something like that. So yeah, for those reasons, there's no way. So think about it this way. It's very simple. There's price structure is consolidation, breakout, retest. That's it. All of that happened here. Consolidation, breakout, retest. At no point after the breakout, at no point are you thinking long at all. I'm not. I'm definitely not. Not even down here, go long, or over here, go long. No way. Bigger picture, right? Put the momentum on your side. What direction is this market going? You can see it did a very serious consolidation and then a serious breakdown. This is a 30-minute chart, so it's pretty large. So you're only thinking down. So don't basically go long into resistance. Wait for it to break out of resistance and then go. Over here, you can see there was support and it broke down through support. And then just came back up to test the previous support area. You can see it's quite a large area for the short. That's how I see these things. And here's another fun one. Simple concept that I've explored but haven't used. Maybe I'll bring it in soon. You're looking at, let's say, fractal patterns that you guys all know about. If you don't, well, you should by now. And identifying levels using fractal patterns. You look at massive directional candles on a bigger time frame. So first, let's zoom out. Okay, so the market was closed, it opened, and you have all this stuff. See these tiny candles not going anywhere. You have a couple of directional candles, but not really. What you're looking for is where did the buyers or sellers truly take over? So here's one. Look at this. It was tiny candles, right? And suddenly out of nowhere, seller stepped in at the top of this candle, straight down, 69.20. Right there, you can quite literally put a level and say, you make the assumption that at the top of this candle, it's resistance. Straw line, that's a resistance line. How about keep going? Let's see if we get any other candle like this. Something massive. Well, you got a couple of bullish ones, but really, it didn't go and overpower this resistance overhead. It took two candles. You need one real serious candles that's telling you these are where the big players are. So far, nothing. It's all like no room to the left, not going anywhere. Nothing here. We only identified this level here so far. Oh, here's one. Look at that. 69.05, right about there, the top of this candle. Sellers stepped in and within this 30-minute candle absolutely smashed it down, right? Even printed a new low below previous support. So I'd say, okay, put a level right there and assume sellers to be there. So the next time the price gets up there, you might be thinking about a short. In a 1-minute picture, the price goes up and puts in a reversal setup like that reverse hammer we just saw and goes down. Same thing if it happened here. If this goes up, then you'd look for that short up here. You'd wait for that setup. So you're already setting up your bias. You're only going to go in one potential direction. at a specific place where the sellers proved themselves just recently. And in doing that, you may find a setup, you may enter, you may stop out once, stop out twice. Maybe the third one works, maybe it works right away. But what you're not doing is getting confused that I can go long or I can go short. You see how that now will minimize your over trading issues. It's just a very simple way. You have to go on a bigger time frame and look for a specific point in time where the buyers decided to get out of bed and get aggressive. So it happened here once, and then it happened here once. So let's keep moving forward and see what we get. You can even see it here, but really the buyers over here, that's when they truly stepped up. Started moving here, you can see, the sellers really stepped in here. Now here the buyers stepped in. You can see the behavior, right? Sellers took over here, and for the first time, the buyers actually came in, and not just came in, but came in aggressively. This is a near perfect bullish candle. So if you're getting down here, now you may think, okay, there could be a long here if it comes down there again. But this is where I like to be careful. Because like I was saying earlier, I see the market as only two phases, sideways and directional. So far, it's been directional going down, right? And suddenly just one candle and you can think, oh, it's a reversal. That's not enough, just not enough. Look for the consolidation zone, and within the consolidation, wait to see where do the players step in, the buyers or the sellers. Over here, seller stepped in, then seller stepped in lower. These are convincing because it's happening during a consolidation, during a sideways market. This is happening during a downtrend. I won't trust it. Just let it be. I'm thinking about the downtrend. So anyways, you can see smaller candles here. This is just a continuation of that downtrend. You can see the buyer stepped in here, but can't really make it go because this is a very firm downtrend. And again, trends happen very nicely after consolidations, right? There's no consolidation down here, just going and basically a retracement more than a trend upwards. There we go. Now this is interesting. You're getting the buyer step up here. And this is a perfectly bullish candle, right? So I'd put a line perhaps down here and think, okay, this is buyers. Because you can see now more recently, it wasn't exactly consolidation, but you can see the candles are small, not really going anywhere. And then here the buyers got out of bed and pushed it right back up. So now you have a couple of different things going on. You have a level here where you're thinking about a short just above 6900. And you have a level here where you may think about a long. So if the price gets to these areas, now you've already put on levels on your chart and you can write on those levels. This is support, this is resistance. So at these levels, these are the trades you're looking for. So up here, you're looking for a short. Down here, you're looking for a long. After these candles in this picture. Let's see what happens next. There you go. So this one goes up. It's that level right there where you previously had identified this as resistance. Now, this is a 30-minute candle, but as it gets into that area, you zoom into the 1 minute and see what happened. See if you're getting your reversal setup, as in this is a 1 minute trend going up, so reversal would make sense going down. And what is this? 11. So between 10:30 and 11. Let's go to the 1 minute chart. Look at it from 10:30 here, 10:30 to 11. It's this time frame. Up here, goes up, and there you go. There's your reverse hammer, fractal pattern. So it gives you that precise reverse hammer, and the level we identified was 6905. Look at that. It's near precise. Almost exactly where the sellers were previously. Here. This is where the sellers were. You can see that giant candle breakdown. When it comes back into that area where you identified, you put the level right at the top of this candle. The sellers are sitting here. When it comes back into that level, on a 1 minute, it does this. Very precise. Amazing how this works. You can enter after you see this reverse hammer, enter the new low. So the next candle is the entry, the stop just above the hammer. And then, you know, it looks like a lot of fun after that. Put on 5 contracts and you would have made 6 figures on this. Quite amazing, isn't it? Now here, if you enter here, like I was saying earlier, you identified buyers came in right here at the bottom of this giant candle. So that's your target, one target. And then you have another low target there. And then I would probably put on measured moves or round numbers further down. I think they'll probably use that number, 6920, I think. Well, the market closed, so you'd liquidate before the close. And that's how you treat this whole thing. like I said, I was too busy eating ice cream at the time. I couldn't watch this. But again, not even a genuinely clean trend day, but at the same time, not difficult to read, right? Just keep your methods really simple so that even when you have a market that's like this, not very clean, it's still tradable. Still very, very tradable. As long as you have your concepts in your head nice and clear. Yeah, Nassim, go ahead.
So another question is where you would put your targets and why?
Yeah, so just looking to the left is where I use the target. So your entry is up in this area. And we're just saying down here, this big white 30-minute candle, this is a major bullish candle, right? So just the bottom of that, because you know the buyers stepped in right there. It could easily come down and bounce off again. Easy, possible. So if you're in a short from up there, you take off half your position here, and that would have been 20 or 30 R or something, whatever, huge. Then you have the low of day, where again, you can see where buyers did step in. So take off a lot of it here. So by this point, you're out maybe 80% of your position.
Right.
And then you got to find targets further lower. You can zoom out, and you'll find some levels down here, down in this area.
Yeah.
Here. That's an easy way to go. Just look to the left, and you pretty much know where to put it. The buyers stepped in over here previously. They stepped in over here. They stepped in over here. And so just take it off over there. That's how I do these things.
Would you set the targets after you entered the trade, or would you actually wait for the 30 minutes to close and then set the targets?
Well, before I enter the trade, I already know where the targets are.
Okay.
The entry area is the level, like you identified this traumatic level right there. And then the targets are really nothing more than where the opposite side of the market came in previously. And over here, we have plenty of previous price action to work with, right? So previously, the buyers came in here, they came in here, they came in here. So you have all these targets.
Right, because to me, I'm looking at those candles, and like none of those candles, like the next 4 to 5 candles, they're not saying anything about the reversal or even consolidation. So like, why would you even get out half of your position if the candles are all red, all pointing down?
Take a look at this. Let's say you entered here, and you're saying the candles are all red. Fair enough.
Well,
but
yeah,
then this starts putting in a wick, and you start getting nervous because it's taking away your unrealized profits already a little bit, right?
Okay.
So you get nervous about it. So most people will struggle with that. The other way to do this is stick a moving average on it, a momentum moving average. So an EMA, an exponential, something that makes sense to you, a 5 exponential, 9 exponential, whatever, and trail the moving average. In which case you may have gotten out probably here, I think. Most likely, if it closed above that moving average, this would have been the candle. In this case, it would have been a perfect hold because it would have got out basically the low of the day.
Right.
It works, but not always. I don't like this trailing moving average thing. First, I don't use moving averages. Secondly, I've done this whole trailing stop thing, and at least for my mindset, it leaves too much money on the table most of the time. So I stopped using it. I think you guys saw me try it out on a 5-minute chart. When did I do that? I did with the options 5-minute chart last year. I think this time last year, perhaps. And I had a few huge days, a few days where it got into 60, 80, $100,000 trades. But there were times when the unrealized was 100,000, and then you end up realizing half of that because, it's a trailing stop. So it has to go against you before you take the profits. It's kind of weird. So it doesn't work for my mindset. But it works.
It's just because, sorry, I'll finish in a minute. When I'm getting into the trade at 6,900, my first target would be the break of that trend, of that resistance or support, which is around lower. Yeah, right there. Okay. Because based on experience, I know that they want to break that support for sure.
Mm.
So they will, even if it's a double bottom, they will try to get as close to that support as possible, try to break it, and if they cannot break it, it's going to be a double bottom.
Okay.
But
that's another good way. Yeah. It's a good way to go where you basically are looking at price momentum, and here you're getting plenty of momentum, as you were saying.
Correct.
The candles are red. Why would you get out? Makes perfect sense. So then the only time to get out is if it gets to, again, a level, and here's the level of support, and you're getting a reversal pattern. If you're getting, as you said, the double bottom over here on the 1 minute, then exit. Maybe even take the reverse setup. So that's another way of doing targets. No problem with that. Again, these ways, I've done all these, or at least experimented with all these. I don't really like to do it this way where I have to manage the trade actively. Like I have to sit and watch it. If it gets to an area, do I take it off, or do I wait for a reversal setup, or what? I have a slightly different mindset on these things, where I'll use this area as a target, and I'll take off a good chunk of my position, and it's all going to be risk-free anyway. So let's say I'm out 80% over here, and then I identify it breaks the low, retest, and goes down, continues down. Then I'll add more back. Anyways, my stop is up here, my break-even's up here. Now I can add in heavily down in this area, and my new break-even is just down here. So this basically recycling your position. I'm more likely to do something like that than wait and see if it provides a reversal setup and in the target area. But again, none of it's wrong. Whatever suits your mindset that you can manage without getting all burnt out and stressed out, and that's the bigger priority, right? Psychology is truly what dictates more than your strategy. So you got to be aware of yourself. Cool, man. Good stuff. Good questions. I like these.
Thanks. Sorry, Dave.
No, you got it, man. You got it. Yeah, Dave, go ahead.
Hey, Avi. Thanks for this one.
Okay.
Just wondering, like the decision to enter the trade and exit is based on the 30-minute candles, not on the 1 minute, right?
It's a combination. That's the whole point of the fractal pattern. You have a bigger picture, and then you zoom in, and on the smaller picture, if it's the same picture, then you enter. So you have to have alignment between both time frames. In this case, on this price action, the alignment is 30-minute. You see this big consolidation zone, and here's where the seller stepped in and pushed it down. So you have a big 30-minute picture. Then you come to the 1 minute, and when the 1 minute candle got up here, it was in an uptrend, and it put in a reversal setup. Look at the 1 minute, and it's right here. It's this one. It went up and put in this perfect reverse hammer. So you can see there's alignment between both time frames. Then it's worth putting the risk on. But if you just go with the 1 minute, you might get faked out a lot. If you just go with the 30-minute, you'll miss the setup, because over here, you're just saying indecision. How can you put on a trade just on indecision? Indecision tells you it's going sideways. So you won't get the opportunity here on the 30-minute. But on the 30-minute, you're getting the direction. Consolidation leading to a breakout. It's a short. Even though it went long for a little while, for a few hours it was going up. The bigger picture is it's actually a short.
But based on like this, these candles, like in the beginning, although like we were in the downtrend today, and these two, before these two dojis, 30-minute, like, so they were like, okay, huge green candles, like, so these two. So how will you take the entry for the short? Like, okay, once you see that reverse hammer, like on the 1 minute, and then like, okay, when it came back, like, so that will be the entry, or like immediately after seeing that 1 minute reversal hammer on that, where will be the entry?
Yeah, that's a good point. It's a little scary to go short when you're seeing these giant white candles, right, going up aggressively, and then immediately to take a short. I get that. So the way to find that conviction for the short is just looking to the left and looking at the structure. Let's do it this way. This is a 30-minute chart. You can see this. It gapped down after the market was closed for a while, and basically a consolidation. You cannot call this a direction. This is all consolidation. All right, after consolidation, the sellers really stepped in here at the top of this candle and pushed down aggressively, even printed a new low. once this candle closes, you're thinking, all right, this is more likely to break out, be a short breakout to the downside than breakout to the upside. And sure enough, that's what happened. And at this point, you may enter here if you like to catch a breakout, retest, all that. It could happen. But anyways, you're thinking short, and you know the sellers are here. You put a level right here, 69.05, saying this is resistance. This is where the sellers were just recently. If the price ever gets back up there, the sellers could still be there. You need to find evidence that the sellers are still there. So it goes down, and then it comes back up, and look, it's coming back up into that area with aggressive white candles. As you said, this is a little scary to go short, thinking going short right after all this bullish activity. So but you know your conviction is on this whole picture. The picture is consolidation here, consolidation, breakout with very aggressive sellers, and then just coming back to where the sellers were just recently, just a few hours prior. And once it gets there, you're only thinking short. See, after this candle, I'm telling you, you're only thinking short no matter what's happening here. You're not getting a consolidation and a break to the upside. You're not seeing any of that. You're seeing that here, consolidation, break to the downside. You're only thinking short. And it gets up there, back up to your previous sellers, and it does this on the 1 minute chart. After this, there is definitely no long picture. I mean, there was no long picture anyway. On a 1 minute scalping perspective, if you see a double bottom, something like this, you go long. I mean, but this is pure 1 minute charts. If you try and do this, you'll stop out 9 times out of 10, get one to work for 2R maybe. That's hard to trade. You know, why would you put yourself in that situation? So pick your price structure on the bigger time frame. I like the 30-minute, but use the 60-minute, use the daily if you like, whatever, something bigger. And pick the structure. And the structure is only got 2 elements to it. There's consolidation and there's trend. That's it. So here you have consolidation, downtrend, and this is just retesting the same sellers that were there right here. I mean, you don't even have to mark the top and bottom of the consolidation. You can just identify where did these sellers come into the market right here. And then they came in at when the candle went back up there, they came in again and straight down. And you would have had a good chunk of this move just by looking at this candle right here. At 10:40.
But where you will enter, like, so will you wait for the retracement of this? Will you go enter like immediately after this hammer, reverse hammer, or will you wait for it to come the price to that level?
No, the level is up here. It's already there. So the level is this one. Yeah. 6905, which if you look at 6905, right there, it's exactly the top of that hammer. See that?
Mm-hmm.
So it's interacted with the level. This is precisely where the sellers were on the 30-minute candle. And now they're here again, right there on that 1 minute candle, right at the top of it. Room to the left on this. In a perfect shape to this hammer. It's got a small body. It's got a huge wick, more than 3 times the size of the body. Hardly any buying wick on it. It's just a near perfect reversal hammer, inverted hammer in the right place. After an uptrend, small candles, consolidation, then popped out of the consolidation, put in the big tail with room to the left. Then the new low is the entry. I would enter on the new low, stop loss above the hammer, and the targets are lower. You don't have to watch all this. I just leave the targets and it goes to the target. I don't sit and watch all this stuff.
Got it. Thank you.
Mm-hmm. Sure. Yeah. And guys, I got to say, this was not the simplest price action to read. It was a little complicated, a little messy. But you can see with simple concepts, you can read it. You can really dig into this stuff. It's not the most complicated thing in the world. It's choppy, it's overlapping, it gets tricky. Is it going down? Is it reversing? Is it going to be a long? Because we know the market always goes up in the long term. Does it go along with this? I mean, you can get all mixed up in your head with a million different ideas and biases and people on the internet all full of excitement and entertainment and the news and all that. But really, if you keep your head clean, your trading becomes clean. So it's very simple. Where were the sellers? If they're still there, okay, you have the same trade. That's it. Keep it really clean. Very simple. This is the one I'm most interested in now. This is gold. Oh, look at that. Okay, it's been very aggressive last few hours. Made that high, and right now seems to want to break that high. So Let's see, all-time highs on gold. That's the high. And if you're looking for that break, what you want is, let's zoom into this. Go get some real-time action. What you want is a good little consolidation, seems to have happened, and then the break, which it did print a new high. It did not convincingly break, as you can see, didn't close, just got shot back down. For a real good breakout, you want it to go some distance. This did not. It came down within, within a 1 minute candle. Ideally, a good breakout, it goes some distance, it comes back and retest and then goes. Especially on a 1 minute, really wait for the retest. Otherwise, you enter on a breakout right up here, you get faked out almost every time. That would have happened to you right now 2 minutes ago. So, not a place to be in. Let's see what we can pick up on this. So we had, big consolidation. This thing's just in a massive uptrend. So for a sustainable uptrend, what you want is this. You have, it goes up, it consolidates, then it goes up, then it consolidates, and it goes up, and it consolidates. And that's sustainable. You don't want it to just go, keep putting in these massive white candles. That's not sustainable. That's when it'll just shoot against you quickly. So you want to be careful. When these candles get really big, you want to take a risk off. And again, for those of you who weren't here, a few hours ago, probably 7 hours ago, Ninja Trader sent an email saying that the margins have increased for metals futures because of increased volatility. And for me, that's a good signal. That's saying, okay, the metals market is moving. Most likely, this geopolitics, commodities will move, geopolitical news. And so, it's on the move. Pretty good catalyst. So now all we got to do is wait and pick up on the setups. So here's a fun one. You can see, let's see, we have, this is a consolidation zone. I mean, it's grinding upwards, right? But it's hardly directional. It can hardly trade. So I think I took a long in this area and closed at the end of the day. Took one partial, I believe, and closed. But if you're looking at it now, you can see that the buyer stepped in from the consolidation, stepped in over here, the bottom of this candle. So if this price action gets down here at some point today, I'll be looking at it on a 1 minute chart and see if I can pick it up to go long from here. I have the assumption that the buyers may be here. So I'm long biased at this level, nowhere else, not right now. This is a big white candle, yes, but it didn't happen immediately from a consolidation area. This is just on the move. So that's why I'm going to trust this level. This will be a point of interest for me. So that's how you want to see it. Same thing as we saw on the spot. The other thing is, of course, if you have this top over here and the price gets there, again, you look for the breakout and then the consolidation, the 1 minute consolidation, and go. Actually, let's look at this. Let's see what it did on a 1 minute. We can zoom out, and I think we looked at this yesterday. Well, today for you guys. Where did it go? Where did it go? Where did it go? Okay, here's that top. Just under 4,700. And let's see what happened. Big old consolidation. It didn't go anywhere. And then when it got to 4,700, look at that. You can see it right there. This is how you catch a breakout. You have the obvious level. The pinpoint was basically 47. You had the Ford got there. You can see the higher lows. Again, hardly directional. It was directional here. Then more consolidation rather than directional. You can almost see a flat top as well. Here's your breakout. Here's your retest and goes. I'll even give you another retest and go. So you have a few opportunities to find entries above 4,700 right there. And then, well, this is how you make 20R in a trade. So look at it that way. I think it makes things a lot simpler. Again, just simple price action. Not looking at the tape or the level 2 or bookmap or any such thing, or getting overexcited about scalping and you need a $10 million account to go make $10,000, and that's just stupid. There's so much money to be made. Make money on the move, not on the size. And here you can see the moves are there, and they're giving you all the signals to get involved. It's not very complicated. I was watching it here. I may have entered a few hours ago, but I was asleep at the time. For me, this would have been about 2 a.m. or something.
Have you seen like the metals are moving crazily only in the after hours or
Yeah.
the pre-market? They go sideways during the regular hours.
So now that you have that insight, what do you do?
Just to put that trade in the evening.
That's it. That's it. You know, navigating this is a lot easier than navigating algebra in grade 4, grade 5,
Yeah.
whatever that was. This is so easy. You know, it's the patterns are just, yeah. Sometimes I feel like my brain is getting dumbed down by being a trader because I'm not challenged. You know, just not challenged on anything technical. You use it or you lose it, you know. That's kind of happening to my brain at the moment these days. But yeah. So, I mean, that's a great insight. If you find that the moves tend to happen in the Europe or Asia sessions, well, then that's when you expect to get into a position. And during a New York session, look at the S&P and the Qs and the Dow Jones, maybe, things like that. I think the Dow Jones is tricky to trade. Instead, I've got the Russell 2000 here, these futures. This is more interesting. So I've been looking at this one. Oh, cool. We got all this. What else is on your mind, guys? Other than the fact that the coffee's cold already. Oof. Gotta make hot coffee. Yeah, Sahil, go ahead.
I took some trades. I wanted your take on that. Can I share my screen?
Yeah, please do.
Uh,
Here, I'll stop mine. You can share yours.
okay, hello. So this one I shared in Discord as well.
Okay. All
See my
right.
screen?
Yeah, I saw this one. Yeah, go ahead.
So on 30 minutes, this is 30 minutes. So it pushed up, and so I was looking at my level over here. You see my screen?
Yeah, I see it.
And I was looking for continuation, breaking through my level and to the next level. So on the 1 minute, it made a doji inverted hammer, like perfect. This one. And so I entered here, a stop loss above it, and hit my target. So my question is, what do you consider a retest? Do you consider this a retest, perfect retest of the consolidation? So you break through the consolidation, and this is the retest, right?
Yep. This inverted hammer here, this is your retest. It's a good one. It's a very bearish candle, right? So it printed lower. So it broke down, it printed lower, even closed lower than your red line there. And then 2 candles later, it put in an inverted hammer right through that level. That's your retest complete on that 1 minute chart. I think that's a good one.
And another one, that was Amazon. Almost same setup. So on the 30 minute, it pushed up and alerted me here. Below this, when it broke the low of the day and low of free market. So this was low of free market. So it came here. This was the entry. So over here, what do you consider a retest? So I entered here. I saw inverted hammer here. And this is a breakthrough. Okay. And so it pushed up, and this one almost engulfed it. So I see this a bearish sign, and I entered here in this candle right here.
Right. Yeah. Now what you're talking about, firstly, is that reverse hammer. I think that's valid as a retest, and you would have stopped out if you took that entry, because your stop would be just above that inverted
Just
hammer.
above this. Yeah, over here.
So most likely would have stopped out. And then it gives you another opportunity, but not where you're calling it an engulfing. I don't think that's an engulfing at all, because there's still some bullish activity. See the wicks down there underneath it? You know, and I don't really believe in these engulfing candles. They get very complicated. But if you look at these candles where you said there's an engulfing, within these 4 candles, it looks like 4 or 5 candles, they're putting in lower highs. You see where you got your little red arrow up there? Looks like an entry. Yeah. So just those candles right where it is, those prior 4 or 5 candles. It's putting in lower highs. Right, and the bottom's decently flat on those candles. So that's an interesting point. That's like a mini consolidation happening within the bigger picture. So then the breakdown from that consolidation, that could make sense for an entry. But then if you look at it 10 minutes later, also again, it came in and gave you a retest on bigger candles, right? Yeah, right in the area, gave it twice. And even with these 2 retest areas, look at the highs. They're getting lower and lower. So there's your clue. The sellers are stepping lower and lower, really taking over the price.
So what do you think would be the ideal entry? If I miss this one, I could re-enter here if I get stopped out here.
Once you identify the lower highs that are happening a little bit later on these retest candles, you've got a couple of entries in those areas. So you've got...
This was good. It never stopped me out.
Yeah, that was fine. And you can see the next high is lower, and then the bearish candle, which happened, what, 8 minutes later, I think, or something? Yeah, move forward. You get the big white candle right after that. Yes, see that one goes down aggressively with a lower high from previously. So you can enter the new candle low after that one. Then it goes up again, a big white candle. Immediately after the big white candle, again, you have a bearish candle that is actually very bearish, no buying wicks on it, with a lower high than previously. So the new low from there makes a good entry as well with a stop above it. And sure enough, that one would have just gone. That's when the momentum.
Entry would be this candle, right?
Yeah, that one, or even 5 minutes before that would have been the same kind of entry.
Yeah.
So I think you had about 3, maybe 4 opportunities to enter this thing. Let's say you took all 4, you stopped out the first 3, you took the 4th. You'd still make a ton of money on this because it made a move and all the way to your
next. It went all the way down, but it did not hit my target over here.
You know what I do with these targets? I'm always a little conservative. When I have these targets, I don't exactly put the order right at the target. I find a round number close to the target and I put it there. And it's just a little conservative. Usually it hits.
Okay, next time I will. So I didn't get break even, but
oh, what a shame! That's a 20-hour trade, and you got out at break even. Yeah, that happens.
It's fine.
That's the nature of the market. So, put it in your favor a little bit. You don't have to wait for it to get to precisely your target. I can't tell you how much money I've not made because of that mindset. It's kind of silly. So, anyways, yeah, you know what to do. You got this. Good job on this. This looks really good.
Thank you.
Yeah, nice one.
Getting better. So I changed it to black and white. It's really better. You can identify bricks much easier. Yeah, so it's better.
Good for you. Everyone in this in our room here is going to become a stoic with me around. Just totally robotic and boring, black and white and all this stuff. But that's what it takes, You got to make sure you remove all the stimulation, all the triggers, all the emotional triggers, including the colors that your eyes see, because red is very stimulating, green is very stimulating. That's why we have traffic lights that are red and green. You don't want that when you're trading. You want to be able to think clearly. If you're emotionally triggered, you can't think.
And now if you look at the 5 minute, I wasn't looking at the 5 minute. So we can also identify over here.
Oh yeah.
Right? To inverted hammers. And you can enter here.
It's cleaner on the 5 minute. And you'll notice with these entries on the 5 minute, you have much wider stops. So your RVR is lower. This may have been 4R, 3R or something on a 5 minute. On a 1 minute, something like 20R. You can see the big difference. So that's one of the reasons I don't like the 5 minute. But what's good about it is the setups tend to be more convincing as they work more often than the 1 minute setups. So yeah, go ahead and take the 5 minute if it suits you. If you're able to perceive it, if it's more consistent for your mindset. Nothing wrong with taking 3-hour trades, man. It's a good thing.
Thank you.
Yeah. Just make sure you hold for 3-hour. You take a 5 minute setup like this, it's going to take an hour to get to the target. So make sure you know that time frame. Yeah, good stuff. What do we got here in the chat? Mohit saying yes. This is retesting the breakout region, confirmation wait for before entering short. Looking at ES now, Mohit? Is that right? Sorry, we wrote that like 30 minutes ago. This is the ES. What are you talking about? Let me know what you see here. What do you got here, Dave? You're saying, is it a way to make these candles wider? Wait a minute. Oh, you mean on my screen? Oh, yeah. Oh, I can make them wider. Just zoom out. Is that wide enough for you? Here's, sorry, zoom in. I don't like zooming in. I like zooming out. Look at that. Now you're getting perspective, much bigger perspective. You know, you got to look at a bigger picture.
I don't
That's
see
why.
the screen.
Oh, sorry. Sorry. Thanks. Thank you for reminding. I always forget this. There we go. Got my screen back in. I think Dave was typing in here how to get my candles to be wider. Well, just zoom into it. There you go. Just zoom in and the candles are wider. But I don't like zooming in. You get lost in the noise a lot. So I zoom out and look at this picture. You get a much clearer picture of what's really going on in the market. Overall buyers in this area, sellers in this area, and a whole lot of chop, mostly based on news. And I like to look at things this way before I start zooming in and picking up on setups and things like that. That's why for you guys sometimes it can be difficult to see my chart, but I prefer this. I'm not interested in the noise and the 1 minute stuff and the scalping and the small amateur trading. You know, scalping the open, going for 2R and getting excited about it, but that's still hardly 1% of an account. That's such a joke. There's more money to be made more efficiently in the market, more efficiently with capital, more efficiently with emotional capital as well. So I like to zoom out and just do things in a much bigger perspective. Anyways, that's my method. But good stuff, guys. Been here for an hour. Any last questions, anyone? Oh, yes, no, you guys all seem to know what you're doing. And you check it out, we now have a second, well, including me, a third aviator in our group who has tasted a 6-figure day. Look at that.
Oh yeah, we saw that.
Yeah, brilliant.
Right.
Is it? Yeah, our little group here is just spitting out millionaires.
Yeah.
I love it. I'm
Awesome.
telling you, it's good. Yeah, it's fantastic. I mean, Ryan did that. He's been an excellent trader for a while, but he did struggle with growing in size, and risk became a problem for a while. But he's come through those struggles, and now he's into the bigger sizes and being able to trust himself with the bigger accounts and sizes. So, you know, lots of progress to be made. It's all about, it starts from big thinking. If your mind is already in a much bigger place, then if your mind is consistently and cleanly in a bigger place, not just out of desperation, but in this clear, simple mindset with emotional stability, then the results quite naturally follow. You don't have to push and shove. You really don't. You know, the world is tremendously abundant, especially the financial markets. My gosh, we are in a world of abundance here with the markets. And the results will come to you. You just got to get your head out of all of the noise and all the nonsense, basically, that's on the internet. And we know all about that. And now 6-figure days are available to everyone. And you don't have to even have a 6-figure account to have a 6-figure day. I showed you guys how all that works, right? It's not too complicated. Just got to get your head in the right place emotionally to begin with. And then we're all here. So big celebrations all around. Fun. Well, this has been fun, guys. I'll end the recording here, and then I got something to share with you.